Akash, it is good to see you. So let's dig into this. You beat on revenue and earnings for the quarter, Akash. Your guidance misses consensus, and it sounds like the issue here, it's memory tightness impacting handset builds. Just walk me through what you're seeing, Akash, and how long do you think those memory constraints persist, Akash? Is it a quarter, two, longer?
Of course. Well, great to see you, first of all. Thanks for having me. We had an incredible results for the first quarter. We had record revenues, record earnings per share, and then within our chipset business, we had record for handset revenues and record for automotive revenues. So very happy to the quarter that we reported. When you think about the following quarter, which is the guidance quarter, we gave very strong guidance in automotive and IoT, automotive growing greater than 35% on a year-over-year basis, and IoT growing in low teens. The challenge that we outlined is really for the handset business, where the demand continues to be strong. We saw consumers continuing to buy handsets as we had expected. Our design win pipeline within chips is very strong as well, and the economic backdrop is reasonable as well. So when you put those three together, the demand profile in handsets has not changed. What has really changed is our customers' access to memory and pricing. Given the success of data centers and several of the memory vendors redirecting some of their supply to the data center needs, the handset customers are constrained. And what you're seeing being reflected in our outlook is really the adjustment process that the customers are going through. And we see it as a short-term phenomena that'll get settled over some period of time. There are a lot of uncertainties at this point, so difficult to pinpoint the timeline, but it is a short-term phenomena that'll get settled. I think the demand is very important for us. It's stable. And as we look forward, we're confident that we'll be able to tide this and continue kind of on the trajectory our handset business was on before this started.
Akash, it's Dan here. Good to see you. I wanted to just kind of ask about where the kind of landscape is as far as the different types of handsets that are being impacted, right? Because, you guys aren't the only ones that are being impacted by memory, obviously. We had Apple discuss that. We had different PC makers are kind of, dealing with this as well. And it's not just, smartphones, laptops, it's anything kind of that uses this kind of memory. Where are you seeing this, though, as far as the price point? Like, is it the lower end handsets? Is it the higher end? Is it,
Yeah.
Where does that sit? And then I want to ask, about the data center business that you guys have. That's in early innings still. Does it play into that at all, or is that just on a separate note?
Yeah, so these are great questions, Dan. And when you think about the handset market, if you're a handset OEM, a lot of your margin and profit is made in the high tiers. That is where Qualcomm is very strong. And so as the OEMs kind of work through the constraints, we very much expect them to be able to fulfill the needs they have over the premium and high tiers. And that should help us a lot because that's, again, as I said before, that's where Qualcomm is very strong. You might see a little bit of volume being sacrificed at the mid-low tiers where there might not be enough supply. And so there's a little bit of impact on us, but I think the key focus for us is focusing on the high tier where Qualcomm is very strong. Data center is an area that we're extremely excited about. As you know, we're not a material player in that business today. But as the data center is changing, inference is becoming more important, power efficiency is becoming more important. We're able to bring the technologies that we have created on the edge and create something unique for us. So we've come up with these new chips. We call it AI 200 and AI 250 that come this year and next year. And what they will be able to do is deliver inference performance that's best in class at very, very low power. And then we're also addressing with AI 250 memory bandwidth, which is one of the constraints that data center operators have. And so as we come in with these unique chips that give an advantage to our customers, we're very optimistic about the traction that we'll get around it, and we're looking forward to our Investor Day in a few months, where we'll provide a lot more details about the product and the traction and the customer interest.
Akash, let's talk margins here for a second, because chip gross margins, analysts were saying this morning, Akash, they seem they seem fine, they said. And so I'm just walk me through the puts and takes there. Is that mix improvement, Akash? Is it cost advantages? What's going on? And what do you see ahead? What does the trajectory of those margins look like, Akash?
Yeah, Josh, our gross margins have been very strong, and the reason for that is technology leadership. I mean, we've done very well. We have very unique industry-leading products. Our customers recognize that, and that's reflected in our gross margin profile. As we go forward, I think that's going to continue. Our leadership is going to stay intact. We are introducing new chips that really offer these unique capabilities, not just in processing, but in AI. We see that as we look at 2027, you're going to see new experiences come into phones, especially with agentic AI at the center of it. And our roadmap gets stronger, and I think that's going to continue to get reflected in our gross margins.
As far as the automotive business goes, you guys have been a player in this for quite some time, and it seems to be on the up and up for the past few quarters. Where do you see that going at this point? How do you expect that to continue to evolve? And I got to ask again: is memory an issue at all in that aspect?
Yeah, I think we've been very excited about our automotive business. I think we've taken the technology portfolio that we have in handsets and really kind of added significant capability to it to make it optimized and suitable for where the cars are going, right? That is an industry that's in transition. It requires a lot more and different kind of technologies than it did a few years ago. And Qualcomm is hitting that inflection point and bringing the right set of technologies into cars. So very excited. I think we talked about Volkswagen signing up with Qualcomm at scale. Several Japanese OEMs, Korean OEMs, US OEMs, Chinese, Europeans, they're all using our technology. And so the scale that we bring to bear is incredible. And we're now becoming the leader in ADAS as well going forward, autonomous driving. The other thing I'll say about automotive is that we are able to leverage this technology into robotics as well. Robotics obviously is an incredible new area that's coming up with humanoids and manufacturing robots and warehousing robots. All kinds of changes happening in the industry, and this is going to be a massive market. And Qualcomm is now at the center of that transformation with our new product, Dragonwing IQ10, which brings the strengths from a connectivity, processing, and AI perspective all together and really optimized product for robotics and humanoids going forward. So very excited about working with the industry leaders on it. And as you look forward for Qualcomm, I think the opportunities are really limitless.
Yeah, I got to mess around with some of the robots at CES last month, which feels like it was 10 years ago, considering how wild this past week has been. But I just want to ask, lastly, on IoT. You guys have a strong business there. I got to see one of those cool interactive bird feeders at CES as well. Fortunately, I can't put that into my apartment. But where do you guys see that business kind of taking shape, and where is the biggest growth opportunity there for you guys?
Yeah, I'll highlight personal AI devices as something that's really a transformation of the consumer experience. I think we've had wearable devices for a while, whether you're putting it on your wrist or in your ears. But those devices are being transformed, and glasses are being added to those device list. And think of a device that can see everything you can see, a device that can hear everything you can hear, and a device that has an AI agent and you can have a conversation with it. And it becomes the most personal device to you. It becomes a device that understands everything about you, can anticipate your needs and help you. And that's a transformation that's coming globally. We're working with the leaders in US, we're working with leaders in China, in India, and other geographies. And that's going to be a massive transformation, a new device coming into the consumer ecosystem, and Qualcomm's at the center of that transformation. So very excited about that part of the IoT business.
All right, thank you, Akash and Dan, appreciate it.
Thanks very much, guys. Appreciate it.
Got to talk about another stock, though, right now, and that is Qualcomm, because those shares are also under heavy selling pressure after its revenue outlook fell below the street's expectations. Angelo Zeno's joining us now, equity analyst at CFRA Research. You got a buy rating still on this stock, Angelo, but there was a lot of disappointment here, particularly in the company's bread and butter smartphone business, which is under pressure because of the inability to get memory chips into these phones. So, this really seems to be a big challenge for the industry overall. How bad is it, do you think, and how long is it going to last?
Yeah, Julie. So, thanks for having me. It's pretty bad right now, right? I mean, you kind of look at how constrained we are. I mean, you kind of, laid it out nicely, but You think about where all that memory demand is going right now. Look no further than Alphabet's results last night and the boost in capex plans, right? That's really the issue at hand right now. It's the fact that you're getting all this memory capacity really kind of devoted to the data center AI infrastructure builds. And as a result, if you're on the PC or the smartphone side of things, you're getting hit really hard. When you look at what's happening with Qualcomm here on a sequential basis, you're looking at handsets dropping north of 20%. Let's call it about nearly 13 to 15% on a year-over-year basis in terms of decline. The good thing is we've now seen this reset on the expectations, and you kind of look ahead. It's probably likely going to remain pretty weak here. We'd say over the next 6 to 8 quarters at least, as far as the memory bottlenecks are concerned, before you really get any notable help. And again, that's gonna hurt Qualcomm, especially given that they do have a lot of business at the low end of the channel, where a lot of those pressures are being felt. On top of that, they are losing ongoing Apple business, which continues to wind down. So they're hitting it all over the place in their core business. The good thing is they are diversifying, and that really is the core story here. If you are a bull, you're getting a very value, cheap play here with a long-term trajectory in terms of new emerging markets.
I guess the question is how long term? Like, how long do you have to wait, Angela? Because if you look at those other sources of revenue, right, which have been growing quickly, and that has been the company's whole strategy. For example, the automotive business, $1.1 billion in revenue in the quarter, so it broke above $1 billion for the first time. But phone revenue is almost $8 billion. So, you put all those non-phone things together, how long is it going to take for it to ramp up?
Yeah, it's a great question. And what I would say here is, listen, the bad thing about being a value investor or looking at value names in the tech space is sometimes it takes longer than you want to wait, right? And as far as Qualcomm is concerned, what we've told investors is you have to be patient with this. I will say this, so last quarter, let's call it about 26% of their revenue within kind of their manufacturing, chip-related manufacturing business came from non-handset revenue. Given the plunge that we're seeing here in handsets this quarter, let's call it about 35% or so of their revenue will come outside of handsets. And we do think within the next 2 to 3 years, that number grows to at least 50%. So on the top line, you may not see much growth there. Not to mention there is potential upside to our expectations. For instance, they are getting in areas like data centers, where if they were to announce some big customer wins, that could provide upside, right, to expectations. So I'd say at this point in time, the valuation plus the fact that, hey, listen, there is line of sight here over the next couple of years. And I know, listen, nobody wants to be talking about 6G because that's towards the end of the decade, but that's also another opportunity for the company long term. So there are opportunities out there, especially when you look at the valuation. You've got to be patient if you're an investor. So
I am curious then, Angela, if you're looking at Qualcomm versus some of the other chip makers, particularly say a Broadcom right now, yes, obviously you're saying you want to own this name, but is there other stuff where you're seeing maybe more opportunity in the short to medium term?
Yeah, I mean, listen, I think, this is a really interesting market right now. I mean, I think you kind of started off talking about some of these software names, and, there are other type of names, that we have really been punished here over the last couple of weeks within the tech arena. And I think the concern really is kind of what does the tail look like in a new AI-induced environment? Not necessarily what's going to happen in 2026, because the earnings trajectory looks pretty good for tech in this year. It's more along the lines of what's going to happen, beyond 2027. And when we start looking at maybe some of the tails with the companies within semis that may have a longer tail, I would look at a name like an AMD that just got punished here yesterday. I know it continues to be beaten down here, but it's a name that we think will turn around and has some really good opportunities tied to them as they start getting into these large-scale rack solutions. I do understand the fact that, hey, listen, can some of this capex momentum be sustained and maybe avoid, some of these other AI type plays? But AMD is one where I think you can get that AI play and maybe that long tail tied to it.
Angela, you also cover Alphabet, so I got to ask you about that one, because there too we are seeing some selling pressure. How much of it is what we heard from Alphabet? How much of it is the concerns you alluded to, right? The bigger concerns that seem to be plaguing tech right now.
I think for Alphabet, listen, I mean, it's just had an insane run here going into the print. I mean, it's trading at about a 25% premium to Microsoft. So you've got that, going against them. Not to mention on top of that, that capex number was absolutely monstrous. I mean, they're essentially pointing to a doubling here year over year. That's going to really destroy the free cash flow expectations here over the next couple of years. So essentially, virtually most of the cash from operations at this point in time being reinvested in that business. So don't expect, any significant buybacks if you're an investor in this name. But that said, listen, that backlog growth that we're seeing from Alphabet really kind of warrants higher spending. So we'll see how this all plays out here over the next couple of years. But if they make do in terms of their promises from this higher spend, there's a really great growth story here to be looking at over the next 2 to 3 years.
I mean, Angelo, in general, do you think that this sell-off that we've seen more recently in tech is really giving a gift to investors who want to add to positions or enter positions?
I think a market like this gets very dangerous in the sense that, it's not necessary. You're not necessarily seeing the pullback here due to some adjustment factor in terms of earnings. It is, again, that long-term unknown as far as we kind of transition to this AI world. What I would tell investors, and I think what most people would agree with, is you do have to be a lot more selective in this type of environment. You do have to look at names that say, hey, listen, where are stories that can continue to grow in an environment here 3, 4, 5 years down the road, where we do have high conviction. A name like Alphabet is a great example of that, where maybe some of these SaaS-oriented names get a little bit more difficult. So I do think there are some value traps in this market. I think there are also some great opportunities.
And you just named at least one of them, a couple of them for us. Angelo, thank you so much. Good to see you.
All right, thanks, Simon.
Turning now to Qualcomm's first quarter results, Yahoo Finance Dan Howley joining us with the latest numbers. Dan.
Yeah, Josh, not great in the outlook, but pretty good in the current quarter, the quarter that they reported, so the previous quarter. Shares are now down around 6.5%, a little bit more. For the prior quarter, they reported EPS of $3.50. That was better than the estimates of $3.41. Revenue of $12.3 billion, better than the estimate of $12.2 billion. The QCT, their Qualcomm CDMA technologies, that's their semiconductor arm. Revenue came in line there pretty much. Ditto for their Qualcomm technology licensing arm, that QTL. That came in at $1.5 billion, give or take a few million there. So in line, generally a decent quarter, but it's the outlook that has Wall Street kind of putting the brakes on them right now. Essentially, the outlook comes in for $10.2 to $11 billion for Q2. The original estimate was for 11.18, so just shy of that point that the street was looking for. And in their release, Qualcomm specifically points to some headwinds from the memory shortage in the smartphone market, but they still say that they're on track for their 2029 goals for revenue overall. And this all comes as the company is kind of transforming itself, right? They're very heavily dependent on the smartphone market right now still. They know that Apple is leaving over time. They're moving away from their modems to their own in-house chips. And so Qualcomm is in this mode of, okay, let's spread out. Let's find other markets that are better for us. That includes things like PC chips, which, I've used some of the computers that use their PC chips. They're very good, very capable. They're also getting into robotics. I got to see some of that in person, hands-on at CES when they had kind of shown off their new chip there. So this is all part of their strategy, but clearly this headwind from the memory shortage caused by the AI build-out, not something that the street really wants to see.
Dan, a big question for Qualcomm investors is what you think smartphone growth is going to look like in 2026. Analysts will say, it's been okay, but what do you see ahead? Tailwinds and headwinds.
Yeah, I mean, look, for Qualcomm, it comes down to, the obviously the radio chips, the CDMA technologies that they're known for, and their own processors that go into into smartphones from the likes of, say, Samsung. Now, on the higher end of the market, you may not see as much of a slowdown just because if companies have to raise prices or even eat into their own margins, then that's going to be okay to deal with or easier to deal with on the high end. It's the lower end of the market where the margins are more compressed that they may see issues with sales. And so overall, I think they're looking at this and figuring, look, the memory crisis isn't going away anytime soon. We're going to have to just kind of gird ourselves for this and give everyone a heads up that there could be issues with smartphone sales going forward in 2026. Now, the flip side of that is, Apple just reported a blowout quarter for the holiday, and they say that they're expecting some headwinds in Q2 from the memory crisis, and then that kind of snowballing more moving forward into the year. And so we don't really know what's going to go on, but everybody that I've talked to has said, look, this is going to impact smartphones going forward.